Alrighty, hi there everybody. This is Enda here from bullwaves.org, obviously, and I'm just back with the weekend video. As always, it was a heck of a week. It was an interesting week, and I think although it was what you might call slightly frustrating, I think we are getting some interesting and let's say pointed action today, which may just indicate that some markets are turning right now as we speak. Or, well, it's closed right now, so it ain't turning right now, but in general, we're looking at a turning market or a shifting trend again. And as always, I try to kind of nail that down a little bit better. And that's the whole point, isn't it? The whole point of technical analysis. And alright, so I've done a stupid intro, so I may as well continue. This is Eurodollar, and again, I'm going to work from the 4-hour chart down to the 30 or half hour, sorry, hourly chart, and let's pull this apart. So it looks like on Eurodollar, we've got this nice wedge pattern, wave 1 to the downside. We've got a pretty decent, although most likely a double combination, wave 2, and we've hit an upper trend line, and now we're moving lower again. So the 4-hour chart is pointing to a turn lower in a possible third wave. So let's get down to the hourly chart. So this is that this is the combination wave 2, and we were looking for a pop to the upside to hit that upper trend channel line. We've got that, and we got moving lower again. So far the move off the low is in 3 waves, so either this is a series of 1-2s, or maybe alternately it's a 3-wave correction in wave 4, and we see one more rally early next week to hit the 61.8% retracement level at 115.80. For the moment, I'm sticking with the current count. The move lower was nice and sharp and impulsive, so we could be seeing a series of small impulse waves to kind of extend lower. We should know by early Monday if this interim high here is broken. So that would be 115.39. So we'd want to see 115.39 hold early Monday and a return lower. Looking at that previous fourth wave there at 114.23, so 115.29 to hold, a break at 114.23 to move lower into to create 5 waves down off that wave 2 high. The aim of next week is to see if we get an impulse wave to the downside to indicate a larger turn into a third wave lower. Okay, so that is Eurodollar. Pound dollar again, you move you over there. Pound dollar looks to be topping, cable looks to be topping in second wave also, and we got that nice little spike higher that we were looking for today, and we haven't turned down as vigorously as Eurodollar has. So let's get to the hourly chart to see what that's looking like. Again, this is a pretty weird and wonderful second wave, if you want to call it that. We were looking at it's probably a triple combination, if you want to call it. It's an A wave up, a triangle wave B, a C wave up to complete wave A, so that's 3 waves up in A, an expanded flat wave B, and now possible 5 wave pattern up into wave C, and we are right within that resistance zone there. We've got the previous fourth wave here at the price high today, actually 128.39. We've got the previous wave B here. We've got the 50% retracement level and the 62% retracement level, all in that little zone there between 128.30 and 128. Let's say 128.20 and 129. So we've got a nice solid zone of resistance here. and we've completed, more or less completed, 5 waves up. So for early next week, maybe not exactly Monday, but between Monday or by the end of Tuesday anyway, I would like to see an initial move down, and again to take out those previous lows of that 4th wave there. So you were talking 127, so a spike lower to take out 127, and we'll see if we can create a lower high over the next week or so to indicate again that wave 3 down is underway. So that's pound dollar and dollar yen, the 4-hour chart in dollar yen. We're looking at this large wave, large triangle wave in wave B, and obviously we had that big whoever fell asleep on the sell the sell button and created this huge fat finger lower. We've got a nice spike higher off that low, and we're holding quite nicely above those 106 kind of previous interim low there, so 106.70. So for now I'm looking at the beginning of third wave up of wave 1, let's say. So let's get into the hourly chart to see what that would be like. In general, this triangle here is over, and you can see that on the weekly chart there. This wave A up, and this is the large triangle that I'm tracking. Excuse me. The second I press record, I think my voice drops about 3 octaves. It'd be great if I was, in the mob or something, but I ain't. Okay, so yeah, you can see that that's the triangle there, and we're looking for a rally up in wave C over the next, well, I suppose, few years. So I think we've probably completed that B wave low, and we're now working on an impulse wave structure higher. So here's the hourly chart. I'm calling this a possible 1-2-1-2 scenario. It doesn't have to be. We could still see this as wave 1 and maybe a larger second wave, which would target about that support level there, 106.70 again. But for now, we're going to stick with this little 1-2-1-2 pattern, and I think this wave 1 in green is a diagonal, leading diagonal. So something like that, or a wedge, if you want to call it that. We could be looking at it with A, B, C down, completed at wave 2. That was the more or less the 50% retracement level there, and we rose off that level yesterday. So, and we're rising into the close again. So we could be seeing the beginning of wave 1 to the upside. I'd like to see early next week. I'd like to see a break that 109 level again. And that would pretty much do it for me. It would pretty much close out the idea that yes, that this is wave 1 up, and for next week then we'd look for a kind of a lower degree impulse wave again to signal wave 3, and that'll be a third of a third. So again, it should carry us reasonably higher, back above the 110 anyway, maybe up to the 111 or 12. So we've got this kind of inverted shoulder here of resistance up around the 112 level. So that'll be the key kind of area to break up into in a third wave. Okay, so that's the FX market done. In general, as you know by now, I'm a dollar bull, and I'm not a dollar bull because I love the dollar. I'm a dollar bull because I think the stock market and the financial markets in general are we're going to see another 2008, 2009, and probably much worse. And seen as most of the world's, the largest percentage of the world's credit is denominated in dollars, in US dollars, that really what that means is that there is a very large outstanding short, so a credit created short on the dollar. And once credit starts collapsing, people run for the actual currency to cover the debt. So hence this large kind of move into the dollar, which would would coincide with basically you're covering your debts, and your or these credits are collapsing, so you're moving back into the currency itself rather than the credits, and that would really light a fire under the dollar, really. And that's the kind of scenario I'm working with. So that's the theory. Let's see how the practice goes, or as economists like to say, that's the that's it works in practice, but how does it work in theory, or does it work in theory? And yeah, stop talking now. Time to move on. It's getting late. It's 10 o'clock. I've had a long day. Okay, so the stock market. Again, is the Dow. The 4 hour, I'm looking at possible fourth wave or second wave. It's probably 50-50 between one of those, those two at the moment. We haven't broken that previous wave 1, either of those previous wave 1s, so it hasn't exactly triggered the alternate account, but I think it's probably just as likely right now. So it's a 50-50 split between those two. Either way, both of them are pointing lower in the short term, and the alternate account would be more consistently lower, let's say, over the next, let's say, month or so, to create, it'll be a larger third wave down. Okay, so we've got a double top there on the 4 hour chart. We've waning momentum. In fact, it's the MACD and RSI are already diverging lower, and you see here in the previous wave 2 high, we had a double top scenario again. So I think in terms of momentum, this is completely overbought, and we're about to turn down either way. Whether that turns out to be a correction or a move, what I favor is a move in an impulse wave lower, in either wave 5 or wave 3. And you can see here that this is the hourly chart. We've completed 3 waves up. I think we've got 5 waves within wave C. We've stalled out, so we may be creating a very minor head and shoulders here. Early next week I would like to see a spike lower, and we've got a couple of levels there, the previous wave A high and more importantly this previous wave B low here of 22,584. So we would like to see, if we're going to get a wave 1 down, I'd like to see it break that 22,580 level again. And yeah, if we get an impulse wave lower, then we're looking significantly lower again, and we'll track that as it happens. Okay, this is gold. Okay, get to the 4 hour chart in gold. So I was looking for a fourth wave correction. We got that fourth wave correction, or we're still ongoing. We could be still ongoing if we take the alternate account. But there's a good chance that wave 4 here is complete at this this little triangle here, and we might be moving higher in wave 5 of 3. Okay, so we're looking pretty good in gold in general. Here's the the hourly chart. We've got that minor triangle here, possible fourth wave low already in at 1280. Although you could, let me think about this for a second. You could see this larger triangle play out over the next few sessions, so possibly into Tuesday evening. If that was the case, this would be wave A down, and this whole 3-wave move here would be wave B, and then we'd be getting wave C, D, and E. So you'd continue to oscillate around that 1287 mark, but even if that was the case, I wouldn't like to see a break of that 1280 low, even if the alternate count was correct. And then we'd be looking for a move higher again into wave 5 to complete wave 3, and I think a break of 1300, possibly up around 1320 level to finish wave 3. Okay, so that's gold. Here is crude oil, and again we've got that previous wave 4. That was the previous wave 4 triangle. We're suggesting a retracement into the fourth wave triangle of one lesser degree, so that's a pretty common retracement level. I had thought that the fact that the trend channel that I was looking at throughout the week had been filled. I was looking for that to be the end of wave 2, but we got a spike higher in a fifth wave, an extension of a third and a fifth wave. So again, we're looking at a possible high in tonight. We've got a nice little spike lower. We'll see how that develops throughout next week. Just like the stock market, I'll be looking for an impulse wave to build off that wave 2 high to signal wave 3 is underway. So let's get into the hourly chart, and here is the hourly chart. There's a pretty decent 3-wave pattern. Wave A up, wave B down, and then extension in wave C. And the extension in wave C was almost slightly longer than the 161.8%. Excuse me. Wave C traveled slightly longer than the 161.8% extension of wave A. So, and also the fact that we hit the previous 4th wave, and we've just broken above and actually back below again the 23.6% fib level. So we've got a couple of dominoes lining up on the bearish side. As I mentioned in tonight's update as well, the fact that these bullish headlines are appearing all over the place right now. Talk of the crude oil bull market again. It's amazing how quickly we turn on a dime. But hey, we're humans. We're great. It's our greatest asset and our worst hindrance. Also, the fact that we can brush things off almost immediately. But for next week, I'd like to see again a bearish impulse wave develop to the downside, and that should signal a turn down into a very large wave 3. So that's what I'll be tracking throughout next week. Okay. Let's move on to the S&P. The S&P is pretty much the same as Dow. They're traveling, they are moving in the same pattern, more or less. The whole, apart from maybe the Nasdaq is still gripped with a horrendous bullishness. But I think the S&P, the broad market, and the Dow are all pretty much moving along the same pattern. I'm tracking an alternate 1-2-1-2 pattern again, with the possibility that today's high was also wave 4 high. So for early next week, again, we're still looking for that impulse wave lower, and that's what we'll be tracking. We should, if it's going to happen, it should happen by before the middle of the week. So early Monday, I would like to see a sell-off to begin the week. We'll just have to wait and see if that happens. Again, we've got a couple of levels to watch for. We've got that 25.20 level, which is the previous wave A, and then the previous wave B is 24.38. So those are the two key levels to watch for an impulse wave to break or to form in around next week. Okay, let's get to silver. Silver again, I think we're still moving higher in wave 1. Don't think wave 1 is complete just yet. Just updating the 4-hour chart while I'm on the fly, as usual. And if wave 1 is not complete, because I think this could be just a corrective move here, then we should see a spike higher again in to complete wave 1 next week. This is here you can see that's the wave 1 high that I'm looking at, and we have leading diagonal wave 1 in pink there, running flat wave 2. We've got a nice 5-wave pattern up in wave 3, possible triangle complete at this evening's lows in wave 4, and then we look for wave 5 to equal the points traveled of wave 1. So off the wave 4 low, you'd be expecting a break above 16, possibly about 1638 or 1640. Maybe if you got the upper trend line maybe 1650 to complete wave 1. And then we'd look for a larger 3-wave correction in wave 2, and that would be, I'll throw that in there right now. No, not the line. Get rid of that. That would be wave 2. So that second wave would probably target that fourth wave low again. So that's again the previous fourth wave at one lower degree, so that would be the target for the second wave. So that we'd see kind of a rally to a new high and a correction back to the same shoulder line again in wave 2, and then we'd look for a rally up in wave 3, and the rally in wave 3 would coincide most likely with a collapsing stock market. So, and again with gold, the same goes for gold. Okay, so let's get on to the treasury market. We're looking for a top out in a second wave this week, and it looks like we're getting a move down, most likely impulsive move down, to begin a third wave down, so wave 1 and 2. I can understand why people would ask why I would be bearish on the 10-year treasury and bullish on the dollar at the same time, but I'm just a complicated guy and that's just the way it is. But the idea would be that the short end of the curve in the treasury market, say that, you know, the 3 months, the 3-month bills, 2 year, or maybe up to 2 years, would probably drop. So the short end of the yield curve would drop, and the long end of the yield curve, you know, 5 and 10 and 20, 30 year bonds would rise. So you'd get this kind of real skew in the yield curve again, where people would be running to cash and cash equivalents. So the 10-year bond would not be regarded really as a cash equivalent, even though it's very liquid. It's a 10-year commitment, let's say, whereas a 3-month bill would be pretty much cash equivalent, because even if you're going to hold it to maturity, it's only 3 months, and even if rates are rising, you're most likely to make money on it, unless something completely horrendously catastrophic happens and the US government stops paying its debt, which I don't think that's going to happen. So you can see how you could be bearish on the 10-year price, plus also bullish on the dollar, if that makes sense. Okay, so I think we've topped out in a possible second wave, and we're moving lower in an impulse wave to the downside, so we're looking at a third wave down. Okay, so here's that second wave top, and you can see a possible 1, 2, 3, maybe a flat wave 4 at today's high. That could also be looked at as wave 1 and 2. We'll see. It's kind of, again, it's one of those 50-50 coin toss type of things. I think if we get a break, let's say of one, or if we push down into 121.40, that's the previous wave 3 low. So if we got a break of 121.40 and we returned higher again, without breaking support, well, that would probably indicate that this is wave 5, and we'd look for a wave 2. A corrective lower high. In the case of the alternate account there, if we got a sell-off early next week and we took out support, and we didn't turn higher, or if we continued to kind of chop lower, maybe down to, let's say, the 120 level next week, well, then I would probably switch to the alternate account there and look at that as a 1-2, and then we'd be moving down into wave 3 down. Either way, next week I think I'm looking lower, and maybe a significant lower high to appear by the end of next week, and that would be a pretty bearish sign for the 10-year. Okay. That actually does it. That was quick. Thanks, you guys. Thanks for being with me during the week. And I promise next week I will move my voice up a few octaves, so you might be able to hear me. We don't need this late night radio voice for Elliott Wave. I'll try and be more chirpy and upbeat. So I hope you have a great weekend. Godspeed, everybody. God bless. We'll see you Monday evening back on the website, and have a good one. Next week could be very, very interesting, I think. Bye bye.